Welcome and thank you for joining me for today's educational class. My name is Joseph Budd, and I'm a certified financial planner and managing partner with Budd Wealth Management. We have developed and refined our client life process over the last 20 years to work with families that aspire to a work optional lifestyle. We hope to put all the pieces of the financial puzzle together for our clients. Connect with us on LinkedIn and Facebook, where we post interesting personal finance content and invitations to future events like this on a regular basis. Also visit us at budwealth.com. You will receive a link to the recording from today's session in our follow-up email. The times, they are a-changin', but are they? We certainly live in interesting times, to say the least. It may feel as if we're living in uncharted waters: political polarization, social upheaval, a global pandemic, trade wars, a revolution in technology. But are the issues we're facing today really that unprecedented? Though the song is more than 50 years old, Bob Dylan's anthem, "The Times They Are a-Changin'," seems just as fitting today as it was in 1964. The lava lamps and folk music of the 1960s aren't in vogue anymore, but division and a desire to challenge the status quo still are. This seminar steps back to provide historical perspective for investors. It's a reminder that we've overcome extraordinary challenges in the past, and we'll overcome the trials of the present, and that we have the ability to prepare now for the uncertainty of the future. What I'd like to do today is look back at some monumental moments in our nation's history by taking a quick look at historical events for every decade beginning in the 1960s. We'll review the challenges we faced as a nation and how history unfolded. Then we'll review some key takeaways from our look back at history. And finally, we'll discuss how those lessons should inform our investing strategies going forward. Let's begin by looking back to the past. When the peaceful protests of the 1960s turned violent, John Lennon responded with a song that supported change while rejecting violence as a tactic. His frustration with both the existing political structures and those who sought to overthrow them continues to resonate today. The 1960 election gave us a young president and the promise of great things to come. We were enthralled by the first Super Bowl, the moon landing, and Woodstock. Tragically, President John F. Kennedy, his brother Robert, and Martin Luther King Jr. were all assassinated. The Cuban Missile Crisis and heightened Cold War tensions caused the bear market in 1962. Nevertheless, the stock market moved higher over the course of the decade, powered by the Nifty 50 stocks that seemed to go in only one direction, up. The 1960s was a decade of tremendous change, both politically and culturally, which is why some people liken the 2020s to the 1960s. Despite all this turmoil, a $10,000 investment in stocks at the beginning of the decade would have more than doubled in the 1960s. In these examples, we'll be looking at these four portfolios: cash in orange, bonds in green, 50% stocks, 50% bonds in light blue, and all stocks in dark blue. And during this decade, we can see that the bond portfolio grew to $11,800. The cash portfolio grew to $14,000. The 50-50 blend grew to $16,000, and our all stock portfolio grew to $21,000 during the 1960s. After the chaos of the 1960s, Marvin Gaye summarized American sentiment when he pleaded for de-escalation. The 1970s brought us two energy crises, soaring gas prices, and rationing, and the Nixon-Watergate scandal. Racism and poverty, particularly in urban areas, remained widespread. In some ways, relief did eventually come. The Vietnam War ended, and the era of leisure suits and disco arrived. Jaws made us afraid of water, while Star Wars excited our imaginations. The feminist movement, demanding equal pay and treatment, gained traction. For investors, stagflation was the name of the game. Energy prices quintupled, resulting in a deep recession, high unemployment, and skyrocketing inflation. However, stocks, bonds, and cash cast off the malaise that many Americans were feeling and turned in positive returns. Our all-stock portfolio grew from 10,000 to 17,000 in dark blue. Our bond portfolio grew from 10,000 to 18,000 in green. Our cash portfolio grew from 10,000 to 18,000 in orange. And our 50-50 blend of stocks and bonds grew from 10,000 to 18,000. It's clear, while Madonna's lyrics about material things resonated, the economy was booming in the 80s and we had more disposable income to spend. The end of the Cold War and fall of the Berlin Wall would also open doors to a new era of global economic cooperation. Conspicuous consumerism was in. Cable, VCRs, and video games kept us entertained. And while cassette tapes had gone by the wayside, the 1980s popularized perhaps the most enduring and game-changing innovation of modern times, the personal computer. From an economic standpoint, the decade wasn't without challenges. Two recessions, soaring inflation, and the Black Monday crash in 1987, which lost trillions of dollars in the span of hours. Yet the market not only recovered, but also delivered one of the strongest decades on record. Our cash portfolio in orange grew from 10,000 to 23,000. Our bond portfolio grew from 10,000 to 34,000 in green. Our 50-50 blend of stocks and bonds grew from 10,000 to 42,000, and our all-stock portfolio grew from $10,000 to $50,000. The 1990s showed us too much of a good thing can breed its own form of discontent. In some ways, economic comfort resulted in a sense of boredom, a feeling that everyday life was devoid of meaning, a sentiment encapsulated by the grunge band Nirvana. Though the 90s were generally calm, they were not entirely without strife. A Cold War tension thawed, reignited racial tension in the US led to the Los Angeles riots. The Gulf War set the stage for decades of future conflict in the Middle East. Broadly, many Americans enjoyed a time of prosperity. A mild recession gave way to a recovery fueled by widespread adoption of the internet and technology. Investors rode the dot-com rise all the way to the record books. The 90s were the second best decade for stocks in history. Our bond portfolio in green grew from 10,000 to 22,000. Our cash portfolio in orange grew from 10,000 to 16,000. Our 50-50 blend portfolio of stocks and bonds grew from 10,000 to 30,000, and our all-stock portfolio grew from 10,000 to 53,000. The 2000s brought pivotal changes to American life in terms of technology, financial security, and our safety. But as the boss put it aptly in his tribute to 9/11 first responders, we rose up together through shared sorrow in a way Americans hadn't experienced in decades. We overcame our fear of Y2K in the new millennium, then embraced technological advances. The first social media apps were launched. iTunes changed the music industry. The first iPhone was released. Automation even came to the polling booth after the 2000 presidential hanging Chad debacle. But technology also burned many investors when the dot-com bubble burst. Then the global financial crisis brought a severe and long-lasting global recession. And from 2000 to 2009, bond and even cash investors pulled ahead of stocks as they experienced their worst decade ever. Our all-stock portfolio in dark blue actually lost money, ending the decade from $10,000 to $9,000 and change. Our cash portfolio grew from $10,000 to $13,000. Our 50% stock bond portfolio in light blue grew from $10,000 to $14,000, and our bond portfolio grew from $10,000 to $20,000. Internet ubiquity proved to be both a blessing and a curse. While offering fun and fame, its anonymity also helped with discord. We exited the 2020s deeply divided. As a title character asks in the hip-hop musical Hamilton, are we a nation of states? What's the state of our nation? On the flip side, it was a decade of distractions. We entered an era of smartphone and internet dependence that both fueled and satisfied our hunger for viral videos, memes, and streaming services that led us to binge watch entire seasons of our favorite shows. In economic terms, the 2010s was a mixed bag. Early on, unemployment remained high, economic growth tepid, and the outlook bleak. Few would have predicted the longest bull market and economic expansion on record would last this entire decade. Though progress was slow and steady, our cash portfolio broke even basically over that period. Our bond portfolio grew from $10,000 to $21,000. Our 50-50 blend grew from $10,000 to $28,000, and our all stock portfolio grew from $10,000 to $35,000. The 2020s got off to a tumultuous start, to say the least. A presidential impeachment, protests against police brutality and racial injustice, record high unemployment, a bear market, and a recession. It has also been lonely as we're socially distanced from 6 feet apart to curb the spread of COVID-19. It's natural to think that today's problems are unique and unbeatable, but every decade has had its own serious challenges. Whether it was the strife of the 60s, the terrorist attacks on 9/11, or the Great Recession, our nation has overcome insurmountable odds before, and we will once again. And perhaps most importantly, 2020 has provided 2 important reminders about the market. It's resilient, and it's separate from the economy. Despite an economy that ground to a sudden halt, the market set records in both the speed and depth of its decline and the recovery that followed. So over the course of 2000, from January to December, our cash portfolio broke even. Our bond portfolio grew from $10,000 to $10,751. Our 50-50 blend grew from $10,000 to $11,295. And our all stock portfolio grew from $10,000 to $11,840. Now let's review 3 key lessons from our look back at history. Many investors are understandably anxious about elections, and some may even be tempted to make portfolio changes leading up to elections based on what they think may happen, or if they're especially concerned that their favorite candidate or political party doesn't win. But history shows that investors have done well under presidents of both parties. A hypothetical $10,000 investment in the S&P 500 index in 1961 would have grown to more than $3.8 million as of December 31st, 2020. In fact, from 1933 to 2020, average real total returns adjusted for inflation for Democratic presidents averaged 10.2% versus 7.3% for Republican presidents. But nearly all of the Democratic outperformance can be explained by the boom years under Bill Clinton and the subsequent dot-com bust and global financial crisis under George W. Bush. Excluding these two presidencies, the difference in returns is practically zero. Source, data stream, Refinitiv, data set in Schroders. The challenges we faced in each decade have been steep, but our nation, our economy, and our financial markets are resilient. Investors who gave into their emotions by reacting hastily did serious damage to their long-term financial health. Stocks and bonds often perform differently from each other. That's why a well-diversified portfolio typically blends stocks and bonds to help build a stronger portfolio. This chart illustrates how different asset classes have performed over time. Your financial professional can help you build a portfolio that's right for you based on your comfort level with risk and investment time horizon. Now let's review some strategies going forward that you should discuss with your financial professional. From 1990 to 2019, 78% of the market's best days occurred during a bear market or within the first 2 months of a bull market, when it's impossible to tell whether a bull has truly arrived. That's these two areas. If you miss the market's 10 best days over the past 30 years, your returns would have been cut in half. And missing the best 30 days over 30 years would have reduced your returns by an astonishing 83%. Systematic investing is a strategy in which you invest a consistent amount on a recurring basis. For example, monthly, quarterly, or annually, regardless of market conditions. This chart contrasts the results of 3 different investors who invested $10,000 per year in stocks versus a cash investor. The lucky investor invested at the market low each year, which is nearly impossible to do. And the unlucky investor invested at the market high each year. And the systematic investor invested on the first trading day of each year. And we can see the difference from the cash investor returns, the unlucky investor returns, the systematic investor, and the lucky investor. A diversified portfolio can position your portfolio for both up markets and down markets. Stocks offer greater growth potential, while bonds can provide income and help reduce risk. When your portfolio is truly diversified, there will be times when one part of it is doing great, but the other is underperforming, and vice versa. When we look at this period from 2000 to 2020, our all-stock portfolio grew from 100,000 to 383. Our all-bond portfolio grew from 100,000 to 286, and our 50-50 blend grew from 100,000 to 364. Not too far off from our all-stock portfolio, but in these negative years, you can see that the downside was lower in most of those environments. Although it feels as if the times are a-changin', and you better start swimming or you'll sink like a stone, it's clear that many of the challenges we face today are echoes from our nation's past. That's why it's so important to use history to gain perspective and to see that the issues we face today aren't unique, hopeless, or overwhelming. And that perspective shows us the American people, economy, and markets are resilient. It also shows us that investment success often has less to do with the market behavior than it does with our own behavior. To that end, we encourage you to partner with an experienced financial professional who can provide objectivity, help you build a portfolio that matches your goals and comfort levels, and help you tune out the noise. After all, as Dylan reminds us, the present now will later be past. Is your portfolio ready to keep up with the changing times? Thanks for your time today. I hope you enjoyed it as much as I did. For those of you today that are not clients, take our risk quiz online. Visit budwealth.com and click on the link, Try Riskalyze. It'll let you know what your risk number is. Schedule a complimentary follow-up session to get your own specific questions answered on your own specific situation. You can schedule that meeting via phone, video, or in person at budwealth.com. For those of you attending that are not clients, as your life unfolds and your goals evolve, our client life process continues to help assist in each of these areas to help strive for reaching client goals. Email us with your email address and we'll send out our introductory kit to those who would like to learn more about our firm and our client life process. You can also request this introductory kit on our homepage, budwealth.com. I hope that you've enjoyed this walk back in our nation's history and have found it entertaining and helpful. Thanks for attending today. Have a great rest of the day.